everyone, SeriousTrader. Wanted to follow up on our video the other day from Forex Trading, how to identify a good trading method, and talk a little bit more about the concept of a complete method. Really, when we were talking about trading methods in general, really talked about how we're just constantly bombarded with new methods or systems almost on a daily basis. And I really don't think that traders can identify the right ones or the best performing or the most educational. So I created the set of 4 rules to share with you to help you select what would likely be a good trading method. Well, in looking at the rules, really wanted to dive a little deeper into each of these elements in a short series of videos here. So first and foremost, any Forex trading method that you consider must be a complete method. And by that, I mean it must teach you the precise conditions under which you can consider a Forex trade to be entered into. These are known as the setup conditions, and they refer to the technical indicators that tell you that a trade possibility should be explored. Second, you should be taught the exact point at which to enter a Forex trade. In other words, the entry point or the price. If you're not really given that, you're not getting any help in terms of when do you get in. And on the other end of that, you need to have an effective strategy for exiting a Forex trade. Unlike stocks, you're rarely going to find yourself holding a Forex pair position for anything more than a few weeks at a time. So it's very important that a method teach you a strategy for exiting a Forex trade once that trade becomes profitable. Or it needs to establish initial and ongoing stop loss rules for an open trade. So where exit strategies will help you when a trade you're in is turning profitable, you need rules that help you in the event that a trade goes wrong. That's part of risk management, and it's imperative. If you don't have, if a trading method that you're considering does not have significant discussion on risk management, I would advise you to abandon it. Because without effective stop loss management and without effective risk management, you are going to get wiped out pretty easily. You can get wiped out in a single Forex trade if the market moves against you substantially, especially if you're not adhering to stop loss rules, if you don't have stop losses, if you don't have them in the right place, if you're risking the wrong amount of money, you're going to get crushed. So those 4 elements sort of combined are going to help you eliminate the chance of getting beat in the market, so to speak. You're not going to always win. You're certainly going to have losses in the market, but the point is to control the losses and maximize your profits. So if a Forex method that you're considering doesn't adhere to those 4 elements, entry rules, exit rules, risk management, and setup conditions, then I would not be able to advise that that is a good method for you to utilize. We need to keep in mind that not every setup condition is going to turn into a trade, nor should every trade be taken. But if you have a set of rules that help you identify the best possible trades that exist in the market at any given point in time, and those rules also define for you exactly how to execute that trade in, out, and protecting it while it's running, that is the method that you want to be using. That is the foundation for a strong, good trading method. So hopefully this discussion helps clarify a bit more about what a complete method is. I'll come back and talk about some of the other elements in my next series of videos with you. Thanks and good trading to everybody.